Recently, automotive investment are getting more and more attention from the investment world besides traditional access such as bond or stock investment. This is the reason why there are so many theoretical and empirical studies which are bullish the automotive access. And the question has been raised currently is that whether automotive access are a portfolio diversifiers. And among a lot of types of automotive access, real estate investment trust, REITs, and the private equity investment are chosen. And the US markets are picked as an invested country based on several reasons, but the foremost reason is that alternative access is considered as a really risky and advanced access, and it required a market which have a long enough operation history and also have a strong fundamental to have a place for the types of advanced access to perform to generate a return. So this is the reason why the US market was chosen to be taken investigation of alternative asset. Looking at the first side of the slide, this is the REIT investment. Based on the factual information and statistic, we can see that among a lot of benchmark, US traditional benchmark, which is bond and stock, the blue line is the REIT annualized returns, and you can see that it presents outperform positions as compared to other benchmark in the US market. And the second graph is annual dividend yield. Why dividend is so critical in understanding a REIT investment, because it will represent more than 75% of the total returns of REIT investment. So that we can see that also the blue line, it also achieved a higher level as compared to the other developing country in Asia and Pacific, Asia Pacific regions, and also compared to the global as an average. And talking about the private equity investment, the visual evidence to prove that private equity assets have a really positive impact on portfolio performance. It taking the consideration of this performance into event in the past of two financial crisis event in the past, which is the dot-com in 1990 and the global financial crisis 2008. And we can see that the loss is unavoidable. All types of investment will have to suffer a really significant loss. But the point is that the contribution of private equity in portfolio would be able to reduce the realized loss of the portfolio as a whole. Among a lot of players in the REIT and private equity markets, MSCI were chosen as the representative of REITs in US, and S&P listed private equity were chosen as the representative of the private equity market in US. And the picking criteria is based on the market capitalization. These two assets can successfully represent the market as a whole. So this is the reason why it shows us based on the historical performance, as you can see, is that the REIT MSCI index or profitability indicators and balance sheet accounts, which is return on assets or return on equity, they are exposed to a positive number over years. But the opposite trends were observed in the S&P listed private equity, when all indicators witnessed a decline, a slump over years, especially looking at the enterprise value. It declined significantly over in the 5 years period of time. And this is based on the historical performance. So if we look at the valuation, the projection for this type of assets, the type of chosen index to be in the next year, we can see the familiar results in the will be concluded beyond the valuation methods with a real estate methods. Net access value per share and dividend discount model were used, and these two models conduct with a familiar results that indicate that the index at the current time is trading at a discount, which is undervalued, and it will have a potential to increase in price in the future. So the recommendation for MSCI index is to invest in that, to buy. However, in the private equity, as we compare to after using the relative valuations compared to as comparables and also the benchmark, we can see that the vertical line here is the required return of the investment, and all the comparable or even the average industry benchmark is trading below the requirement, which is that they poorly perform over a year, and this is the time year investment, 5-year time investment. So the recommendation should be not invested in the S&P listed private equity, even though there are so many research that supports private equity investment as an optimal portfolio diversifier, but based on the valuation and also the individual access, the financial ratio, and also the historical performance, private equity and the chosen access is S&P listed private equity should not be included in portfolio. Thank you for listening.